Okay, we call this a lightning round. I don't know how you can go faster than you normally do. So this is lightning squared. Let's go through some of these companies. I'll let Kelly jump in just a minute. Let's start, why don't we, with Boeing, a company that has earnings out this week.
And it's good to see you and be with both you and Kelly.
You get.
Yeah, so 180 companies in the S&P 500 are reporting this week, so it's going to be very busy. Boeing, though, I think is very important. It's a reopened name. We know the airlines last week reported okay results, but the guidance for the second quarter was very, very strong on traffic trends, on pricing, on capacity. This story also trades on the recovery of 737 MAX, which it's happening, and then the 787 deliveries, which I think is going to be second half 2022. That's what the rumors were over the weekend. But it also trades on free cash flow. And while they'll see a cash burn this quarter, I expect them to reiterate $5 to $6 billion in free cash flow for 2022. The stock's really lagged, and I think this is their year to see a recovery.
All right, let's talk about a company that is also, like Boeing, been through its hard times, and that is General Electric.
Yes, and this is a reopen, too, and it's tied to Boeing because they provide engines to Boeing and to Airbus. But aviation has been their strength over the years, and I think commercial aftermarket are going to be really good results. They've done a good job in healthcare. That's been their gem, but it's been supply constraints. So I think you're going to hear good things about the supply constraints easing for them. And then power, they're doing a good job on cost controls. This, too, Tyler, trades on free cash flow. $5.5 to $6.5 billion for this year is the bogey.
Let's move on to the next one, which is McDonald's, has been in the news lately.
It has been in the news lately, but, you know, a couple of years ago, they decided to simplify their menu, and it's really worked. It's led to double-digit same-store sales throughout the pandemic. This company also has the 3 Ds, if you will. They've been investing in digital, they've been investing in drive-through, and they've been investing in delivery. And those 3 things will keep same-store sales in the low to mid-single digits. I like the story. It acts like a staple stock, too.
The 3 Ds at Mickey D's, delivery, drive-through, and digital. Stanley Black Decker.
Stanley, I mean, they've done all the right things, but the stock just can't get out of its own way. But this past week, they actually sold out of completely their security. Finally, this is what we were looking for. They're going to take that $4 billion and buy back stock. The story trades on tools and storage. That's 70% of total revenue. Home Depot and Lowe's is 30% of that 70%. I think that they're doing just fine. And we want to hear what they have to say about supply chains, because they've been really plagued by the supply chain issues. But I think it's going to get better for them sometime in the second quarter.